Hi, everybody, and happy weekend to all of you. The first full trading week of January is under our belts, and I'm pleased to take you through a lot of charts again. We'll call it stocks A to Z. And as usual, going to begin with weekly charts. And you're going to see on the weekly charts that I've picked, everything is in really good shape. The general thesis that I've been following since really around May of 2020 that were kicking off initiation legs of very strong multi-year, probably multi-decade bull markets are happening. We're still in early stages. We're looking at SPX weekly, and I have us right in the heart of a cycle 3 of super cycle 5 and right in the middle of an intermediate 3 wave, yet to finish a minor 3 within this set of degrees. So you're going to see as we look through weekly down to daily down to short term, it is possible that we're getting very close to these minor 3 targets. We're going to see it, the possibility here on SPX and QQQ, IWM, and XLF in order. And then I'll take you through maybe a dozen or so individual names, including metals and miners. It's possible that we do get a pullback here quickly, but I do think any pullback is going to be short in duration, I think. And I think relatively shallow. I've got it in a minor 4. But minor 4s typically are not recommended to trade. They can be complex, they can be triangles, they can be flats, they can be zigzags, they can be very, very difficult to try to time and maneuver in. So once that temporary top is in, the recommendation for me would be to sit on your hands for a while and wait until we can see some type of tradable, confident bottom, ideally with a low and then a move up and then a higher low where we could enter with some confidence. Okay, so getting into the charts here, there's nothing concerning at all about here SPX weekly. We're going to notice that we're very strongly within this minor 3 progression. Slight divergence that I've been indicating for a number of weeks on the RSI. No divergence on the stochastics and the MACD, so no real technical worries there. I'm going to go ahead and just stay with SPX and get you now here into some of the smaller degree details. So there is the potential, I've said before just recently, that we might be at this minor 3 top. I have typically my blue counts are essentially alternate, slightly more bearish versions within my main primary trend. That is the way that I like to color code. So that blue count is the one that says that on Friday, January 8th, we set that minor 3 top. And then these would be the most common minor 4 fibs if we do happen to retrace right away. Now, black is my primary count, whether it's up or down. And I do think there is room here for a continued move through the 3800s, possibly even a push if things get aggressive into the low 3900s. Now, you're going to notice if you pay attention to Elliott wave fibs, that these fibs are not real aggressive. And I think that's taking into account that the conditions here are not strongly favoring aggressive moves. So I do sense whether it's going to end up being a minute degree, like the primary or the more bullish version of the primary, I do think a pullback is coming soon. The degree, as I'm indicating, is it a minor degree? Is it a minute degree with one more push yet in January? And then we see that minor low. That's really the distinguishing waves that have yet to happen. I think we're going to get resolution to that this coming week. So drilling down now here into the short term on SPX, you can see a valid 5 waves up to finish this last sub-degree wave. That could either be the final minute 5th of minor 3, and now we would be moving down to maybe this dash rail support, or we could just set a continued movement up, and you can see those targets here on the smaller term. I would point out that we do have, basically about 2 weeks worth of negative divergence on the RSI. So although that's short term, that typically is good for some degree type of correction, whether it's of a minute or a minor degree yet, as I've indicated, that's yet to be found out. Let's get through some other weeklies, and just like SPX will move you all the way through with QQQ. So I have Qs here in a slightly different degree. I have Qs here within a primary 3, a little bit further on in their wave progression than SPX, I think, from what I've charted long term, but still looking to set a minor 3 top. Now, it is possible that there is a more bearish count, and the way that I code these is anything that's much more bearish, either immediately or upcoming with another move that could turn into a much more bearish count, is in red. Now, I think that's a very, very low probability move that we see some type of big January, February correction. Like SPX, I'm looking for a minor 3 top into a minor 4 correction. And this 327 target could turn into something in the 340s if things get pretty aggressive. So getting into the daily here on the Qs, get that to pop up, and you're going to see the possibility again of a minor 3 to a minor 4 low. Primary black is showing continued strength into this coming week, which is my primary. But I would have you notice that on the daily, certainly more divergence is apparent. Okay, so that doesn't always play out quickly. You're going to notice that this is a month's worth of negative divergence on both the MACD and the RSI. Eventually, that will result in a correction, but whether it happens the week of January 11 or we get a strong move up and then a pullback, as I said, yet to be decided. So getting into the shorter term look, excuse me, on QQQ. So we're going to see, I hope we're going to see, there we go, possibly a much more bullish count if things just blast off early in the week. Typically, the much more bullish targets I put in purple, or if we immediately turn around, you're going to see these targets here, low 300 or maybe right at 300 would be the target that I would be looking for. Okay, so if I was to give a probability weighting on these, I'm not overly bullish. In fact, when I show you IWM and XLF, I'll show you a little bit why I'm not quite as bullish going into the week. So let's get into those two names on the weekly. So IWM and XLF, they hit within pennies these minor 3 targets. Now, absolutely, they could extend, but they're far extended above their moving averages. And this is kind of the evidence that makes me think, well, maybe the pullback is a little more imminent. So I'm very, very looking closely at how these names respond. If I take you into the IWM daily, there isn't really any noticeable RSI divergence. There is a little bit, not quite as obvious as on the Qs, but again, maybe a little throwover of that rail, possibly. It's not a hanging man candle, but a little bit of a bearish reversal look has me a little bit cautious going into the week. So just for disclosure, I did open IWM puts as a hedge on some of the longs, not a significant play here, a very small percent of my overall account, but just a hedge, just in case we do see some weakness right off the bat. Okay, so that's looking at the daily. Now to the short term, you're going to see this channel since November has just been amazing. You talk about an impulse bull channel. Look at that driving move. Okay, and did we finally get that top touch? That's what I had kind of been saying was going to happen last week. We didn't quite see it. It's close enough, I think, to be able to say that minor three top could be in. But of course, it's still strongly above all moving average support and strongly within this bull channel. So you're going to have to see a breakdown first below 200. And then obviously we're going to have to see if we can chart it as a three-wave move down, because that's what we'll be looking for first for a minor four correction. So also a little bit of weakness on Friday was XLF, but otherwise just an incredible move like small caps. Small caps industrials financials been leading the way, outperforming on a relative basis QQQ, and a huge week, up 5%. But something interesting here on the weekly is since March, anytime XLF has had a big week, that big weekly bull-looking candle, it's pulled back. So here, up 19%, down 4. This big one, up 12, down 9. This one, not nearly the scope of magnitude, up almost 5. Are we ready for a minor for pullback? We hit to the target within pennies. So again, a little bit of evidence has me cautious. I do not suggest, or I would not have suggested at the end of this past week, that anyone is aggressively long going into the weekend, just based on some of this evidence here. Let me go ahead and drill down to our daily here. Oops, I had that on this chart. So into the daily here on XLF, and you're going to see again just amazing moves from November. And these two topping candles, I do think they look topping. So this one has more of a gravestone doji. This one more of a hanging man. They do look to me like a set of reversal candles. I could easily be wrong. As far extended as financials are above, let's say their 8-day EMA, certainly their 21-day EMA, I would not be surprised to see a pullback here, some reversion back to support at these moving averages. And again, it could happen very soon. Okay, let me get you now into some individual names on the weekly charts. So the names that I'm really interested in right now, Facebook. So Facebook first, a monthly chart. And I had to go back and revise my long-term count here for Facebook. I might have the degrees wrong. We could actually be looking at cycle waves, but Facebook, a relatively new IPO. It's less than a decade old. So I've got these as primary waves, and in fact, that should be a primary 2 on its first initial retracement. And then making some really nice fib extensions and pullbacks into what I think is a culminating move to a cycle top. So I do think that Facebook makes a significant cycle top soon. It could happen, according to this red alternate count, if we have, since this low in December of 2018, 1, 2, 3, and then I'll show you a triangle count here on the daily, into a 4, we could be looking at a Facebook cycle top in the first half of 2021. Okay, now that is my alternate bearish count. It's of less probability. I still am thinking that it participates with the rest of the general market into a strong move up through, let's say, 2022, 2023. But we got to be aware. So when we're seeing something break out and pull back and then just kind of squat down like this, I wonder if there's institutional strength behind it. I just have that doubt that maybe something like Facebook and Amazon might have something else in mind. And we've waited long enough for these names that at this point, I think we have to entertain multiple possibilities. So let me get you into the weekly, and you're going to see a weekly candle, a little bit concerning, I think, because we've got a lower high and a lower low. I thought last week we had broken that pattern, and I thought we were going to get a break-in move up, certainly above this swing high, 291.78, did not get it. Now, that more bearish count that I just showed would have Facebook in a triangle. And I think 3 waves in, if we do get bullish resolution this coming week, and Facebook can't top out any higher than, let's say, 286, 287, and then it just does another reversal, it certainly puts this 5-wave triangle count to a high probability. If we get a significant breakdown in Facebook, that would be a temporary bearish version of the bullish continuation count. I'm still leaving as my primary that Facebook has something left in the tank. Okay, that it will move up strongly as my primary count, and I can get you to that on the daily so you can see Facebook. Let's make sure we get there. Okay, so we've got that red count. I know this is a little busy, but I'm charting all of the detailed degrees in the triangle. So a pop up, 286 or so, a move down, maybe right before earnings. That is a timing thing that I kind of like. Or we just drop right out of the support and right into earnings, we're moving down. Okay, so we gotta be just open to these possibilities. I'm not saying that it's going to fall. I'm just saying it's really good for us to be aware, but it does still have, as long as it's above 257.34, it does still have valid bull targets for continuation. Okay, since we're on the daily chart, let me go ahead and show here Apple. So we get to Apple on the daily chart, and then we'll take a detailed walk through Amazon and Tesla. Okay, so Apple, we got the new all-time high breakout. We got a breakdown, and it's a possibility as an alternate count that we just got a B wave bounce, and we're going to see some more weakness. So that does fit with the possible weakness that I'm alerting to in some of these other indices and ETFs. Primary count is still valid as long as 125.95 holds. We had a very, very close test. This inverted bullish hammer got a couple days worth of nice move up. Where does it go from here is now the big question. The bullish resolution says strongly and aggressively up. Okay, so now let me take you through the progression of Amazon. And so for Amazon, busy chart, but again, lots of possibilities here on the weekly. So looking like a high pennant, looking like last week was a breakout, but then we broke back in. So that's concerning. If we have a breakout and a pullback, we can't go anywhere. It makes me wonder what real kind of strength is behind the move. And you're going to notice this, it actually closed back underneath the 8-week EMA. So I still have as the primary until it's proven otherwise. That's my system. The primary is the primary till I'm told it's not, is that we get bullish resolution. But I do want to alert the possibility, kind of like Facebook, of a move down in a triangle, or a much, much more bearish possibility that we had a truncated top. So low probability, but again, when we're not seeing a big name stock like Amazon participate yet, we just have to be aware of the possibilities. So getting through the progression back into the daily here, we're going to see a little bit more detail. Now, if Amazon moves down, I think it actually moves down right away. I think we've already set here the A, B, C, D, and kind of an extended E wave. You could also, if you wanted, you could call this the D wave. There'd be nothing wrong with that. Either way, we're working on finishing up the E wave. So I would be looking for support below 3,100, I think, maybe 3060 for some support. There is solid pivot support just below 3,100 if that happens. But you can also see still valid counts. The nested bull is still valid. But I would have to say, at this point, with the lack of breakout backtest and then recharge up, that is less probability than what I would have said for instance, when we were above 3,300, obviously. So we just have to be aware of some of these possibilities. Okay, let me get you through a dive on Tesla here. And so to the weeklies here. And Tesla, just what a beast. Just smashing through all fibs. And really, by calculation of fib, I don't have anything that suggests a top until the mid to upper 900s. It's possible that 900 is a cycle topping pattern. It just seems so unlikely right now that Tesla would put in any kind of major top at all. I think we see Tesla above 900. I mean, why would you think at this point any differently? Just as it's just been incredible. Look at this parabolic move. Now, with that said, there's always reversion. So is it possible that this is a topping candle, like a gap up exhaustion move? It's possible. And that would obviously coincide with some of the near-term bearishness that some of these other charts suggest. But even if it did that, I think if I take you into the short term, even if it did that here on Tesla, it's probably just a minute degree. So it could jump up or pull back right away, but it's not going to go very far, and until I think it makes potentially a topping target in the mid to upper 900s. Okay, so if you've been long stock holding Tesla through the duration of 2020, congrats to you. I've been actively trading it in and out. You probably saw me tweet that I, what obviously foolishly now, I took profits on my call options here at 760 before this little mini pullback. I didn't add in. If I had kept those, that was 5 figures of profit that I left on the table, and you know, let winners ride. That's always something that I can do better. So let me get now. Want to make sure that I can get through some metals. Just a terrible day on Friday for metals and miners. But you got to put this in perspective. That in perspective of weekly or monthly charts, although GLD, that bearish engulfing, is a little worse, it doesn't look so bad on the others. So GLD did break back down into this bull flag. If I take you through now a daily here on GLD, let me get you into here. Okay, so you'll see that the depth of that pullback, it has to be a degree 2. I'm not thrilled with the look of this count. It's really weird up here with 3 and 4, but I also don't feel good about any kind of nested 1 and 2. I just think that's a little contrived. I think this is a 5-wave move, and this is a minor 2. If this 200-day SMA can't hold, then we're probably needing to re-examine the bull case here, and maybe we're going to try to set another divergent low against this 166 here on GLD. So GDX, it's gradually going to start looking a little bit better as you start looking at these weekly charts. What I want you to notice on GDX, although the week Friday seemed completely tainted by the move, is this lower rail held. We held key MA resistance. We challenged the top, MA support I should say, challenged the top of this bull flag, and nothing's violated. We're still in a valid push. And yes, I am much more bullish on miners than I am the metal. I think in the early progression, if the bull thesis plays out, if the inflationary move that I'm suggesting across these sectors happens, that miners will outperform. So there's nothing here to suggest that Friday did any lasting technical damage. Let me take you into the GDX daily. And here on the daily, now again, I'm not thrilled with the count. It's kind of too forced and doesn't count as a leading diagonal because you can't have this be a third wave because it would be the shortest, and you can never have a wave three that's the shortest in an impulse. So I have this kind of in a failed flat, and then into a subdegree two. So no matter how you count it, it's got to be a wave two because of the depth of the pullback. But again, it's right there in the range of moving average support at lower rail support. It was painful to have to hold positions through, but I do see brighter days ahead. Okay, let me get you into SLV. So SLV, when you look at this on the weekly, it's not that bad. It looks like kind of just another uh, pennant or maybe even a triangular consolidation here, but I have it certainly within a wave two pullback. So if I take you through SLV into our daily, just the savage move down with that candle has to be of a degree two. I did a pretty good job calling that top. If you were walking with me through, I said 2570 is going to be that topping target. If I jump you back to the weekly, here's why. This right here, we've got just significant long-term pivot resistance right there at 2570. Okay, so that was support along this way that broke, that then obviously had to turn into some significant resistance.